Welcome to my latest video. This one has to do with sales growth as we approach earnings season. I have researched quite a few companies and come down to I don't know, 9, 10, or 12 of companies that I think will have strong sales growth for the next, not only this quarter, but for the rest of the year and ongoing in years to come. I wanted to put this video together as we have earnings coming up this week from Robinhood and Spotify and Reddit and a lot of the stocks that I have included in this video. But I just wanted to, identify some companies. Obviously, the companies that are talked about all the time are Tesla, Nvidia, Apple, Microsoft. I'm not going to discuss any of those large companies. I'm looking for smaller companies. This is a 44 billion market cap company. Could it be a five bagger? Sure. Yeah, it could be 250 billion. Why not? The thing I like about Robinhood, and I think they're going to continue over time, is their sales growth. 36%. Now, last quarter, they had their first billion-dollar quarter, 115%, and their growth is going to be up and down. It's not going to be, linear. It's going to be, hit and miss. But over time, I think you'll see their subscriptions, memberships multiply, their sales growth multiply, and over time, their stock price will appreciate. Now, it's up, no, I don't know, what was it, up 20% last week? So if they crush earnings on Wednesday and the stock doesn't go up, that's okay. I mean, all a company can do is, report strong earnings quarter after quarter, year after year. And I think with the sales growth, with the subscriptions and the memberships that they're gaining, I think Robinhood is one that's well positioned. They're an innovative fintech company that I think are going to report strong earnings quarter after quarter, year after year. So, you know, they're going to report Wednesday. And like I said, they'll probably report a strong quarter. I have no idea if this stock is going to rip like it did last time up to 66.91 after the last earnings report, or, if it's going to sell off back to its 200. But over time, I'm more concerned with over time, this earnings line heading north, that stock price will reflect that over time. In the short term, I have no idea where it's going to go. Longer term, I just think with their sales and earnings growth, Robinhood, like I said, they report Wednesday morning, I believe. So, yeah, I expect a strong quarter. Like I said, it's up 20% last week. I have no idea how the stock's going to respond in the short term. Longer term, I think they're going to be a big winner. Dutch Bros is my second one that I've identified. I've done a lot of research on Dutch Bros, and I think, yeah, it's a cult type of a stock, and there's a lot of young people who like Dutch Bros. They'd rather go to Dutch Bros than their parents or grandparents who go to Starbucks. So they're gaining a loyal fan base with a younger group, and I think that's going to bode well for them. They're only in 18 states now. They're going to, rip through the South and build up through the Eastern Seaboard and finally get to New York, and they're going to expand beyond the United States. So they have plans for, I think, 7,000 stores. And so I think these guys are going to deliver. Once again, it's not going to be linear growth, but they're going to have strong sales growth. Recently, they had an investor day, their first investor day, and they announced same store sales, which was they increased their guidance for same store sales, and the stock sold off. Why? Well, because the market sold off, and we're seeing this a lot. These double bottom bases patterns because this is what the index is doing. So I think eventually this will be a leading stock in the retail space. It's going to take time. It's not a cheap stock, but at 9 billion market cap, could this get to 50 billion and be a five bagger? Absolutely. Could it be a 10 bagger at 100 billion? I think so over time, but it's going to take time. And with the earnings line heading north, the stock will head north over time. I mean, it's like I said, it's an expensive stock. They're doing what, about 2 billion in sales, and it's a 9 billion market cap. So it's for a retail stock, it's afforded a pretty liberal multiple, pretty rich multiple, I should say. But Dutch Bros, I think over time, quarter after quarter, year after year, once again, it's not going to be linear growth. It's going to be, up and down, some very strong quarters, maybe some mediocre quarters, but over time. I think Dutch Bros is one to own for me in longer term. So that's my story, and I'm sticking to it with Dutch Bros. Rubrik, I'm going to get into the cybersecurity names. Obviously, CrowdStrike is the big kahuna, and Palo Alto Networks in this group. Fortinet, there's a lot of them. Rubrik does a little something different than CrowdStrike. But what I like is their sales growth, taking market share, and that, kind of like Dutch Bros and Robinhood, taking market share, increase sales growth. That's the key for younger companies is get the sales, get the clients, depending upon your business, get the members, the subscribers, and the earnings will come afterwards. So they're having strong sales growth. They are taking market share. Now it's up to a 13 billion market cap company. Could it be 60 billion, 70 billion? Sure. Over time, I think, if you're looking for five baggers, which this video is all about, not taking 10 or 20%, and buying a Google or an Amazon and being, safe, so to speak, a safe haven. We're looking for grand slams here, and you can see the earnings line with Rubrik heading straight north, and I expect them to continue with their, earnings and sales growth here. You can see obviously IPO base ran up, now consolidating, double bottom. But over time, I'm talking like this thing just came public. This is a little baby here. It came public in April of 24, so it's only been on the market for a year. I consider anything, under 10 years still, pretty young company. So anyway, Rubrik is another one that I like. Reddit, social media. I believe social media is going to be getting stronger and stronger. These guys are taking more market share. Um, Once again, just getting subscribers here. You're not so concerned with the earnings as the sales. And I know last quarter they had a 39% increase in membership, and the street was expecting 41, so that little bit, caused them to do this, massive sell-off and just a tiny little miss. But kind of missing the big picture here because 48%, 54%, 68%, 71% increasing sales growth. That is going to lead to earnings growth eventually, not right away. At this stage of the game for Reddit, they just want to get more and more eyeballs, right? More and more members. They're going to report earnings this Thursday, May 1st. And, like I said, I don't know how the stock's going to react. But once again, this is just a little baby here. This thing just came to market, a year ago, March of 24. So give it some time. I think, like I say, quarter after quarter, year after year, their earnings are going to be, they're not going to be this, same solid 71% growth, but they're going to have consistent sales growth over time, and that will reflect in the earnings, which I guess next year, $2.17. Not bad. And right now it's a 21 billion market cap company. Could it be 100 billion? Sure. I mean, they have, three times the subscribers as Twitter or X, and Musk bought X for 44 billion. Not saying this is worth 44 billion, but they have more members. Why not? I just think social media over time is going to be a larger and larger market, and they're going to get their, the lion's share. I'm on Reddit. I like their pages. And anyway, okay, that's number four. Number five, six, seven, eight, nine is, and then the medical group. And there's a lot of medical stocks that I like. I'm going to start with HIMSS because I keep talking about, subscribers, members. That's kind of how Amazon did their, they didn't really care about making money from the jump. They just wanted to get more and more people in their network. And that's what HIMSS is doing, getting more and more people in their network. I had a problem with them because they were trying to fight Lilly and Nordisk, and I don't think you do that. I don't think it's a very successful business model to fight them. They, made peace with Lilly. They signed a deal with Lilly. So that to me is a big move. Now, obviously, only 10% of their sales are from the weight loss drugs, but you can see, the sales growth 46, 52, 77, 95. I mean, these guys, and they're gaining more members. Only a 6.2 billion market cap. I could see this thing being a 50 or 60 billion market cap over time. Now, I'm not saying this year or next year, but give it time. And you get a sell-off here, and this thing's trading where it was, gosh, a long time ago, right? At $28, it was trading around here, in June of 2024, like a year ago, right? Even in November is $30, and now you're getting it at 28. So I don't know. You take advantage of the sell-off to that 40-week line. I think they're just going to continue to gain more members. And there you could see your sales growth here. They're going to be reporting earnings soon. In their June quarter was 315, June 567. So you could see the growth here for HIMSS. So anyway, that's the first one of these medical products, drug stocks, healthcare stocks. The next one I'm going to go to is ADMA. They put out a release recently saying that everything they do is United States. They manufacture their drugs in the United States or sales, customers, clients, everything's in within the United States. So they're not going to be bothered by the tariffs. They have strong sales growth. One thing that kind of turned me off to ADMA was they had a little bit of they were challenged on their auditing process and their accounts, and I don't really go for companies. I stay away, but I think that's behind them now. And a company that's a 5 billion market cap company with, strong sales and earnings growth coming, it could get to 20, 25. I could see this being a 4 or 5 bagger. You can see the earnings line heading due north. Right now, it's just made a nice cup with handle pattern, and it's actually, I think, a decent buy here. It's offering you an opportunity. They report earnings on May 7th. So that's my second medical biotech stock. And this one is 5 billion market cap, not a massive large company. All right, the next one is TGTX. Talked about this one a lot. This is the multiple sclerosis drug Briumvi, which is taking market share. This is a 6.5 billion market cap. I could see this one this year at 10 easy, next year or 2027 20 billion. I expect it to be 20 billion. They're taking market share, and they're going to have about 1 billion in sales 2026 and 2027, about 2 billion. So you're looking at a company with 2 billion in sales at 100% sales growth. Yeah, 10 times sales, 2 billion sales. That's why I get my 20 billion market to cap. So yeah, I think this is one to hang on to. WGS is another one that I like, but don't I digress. Anyway, the thing about this one is they have recurring revenue. So each, they're taking market share from their competitors. So each switch that they get is added to their revenue. And MS patients live a long time unless somebody starts stealing their patients, and that's not happening. They're stealing other people's patients. So their sales growth, 73, 83, 108, plus all their ads. So this is exponential growth. It's not linear, but it's exponential. So every ad that they have adds to their bottom line because they have this reoccurring revenue from each patient that they add. And unfortunately, we're having more and more people with multiple sclerosis. So the new patients are being subscribed to Briumvi, and they're getting a lot of switches, way more than I thought, or I think even management thought. They're getting a lot of switches. We just had heard from a key opinion leader, I don't know, a week or two ago, and they're definitely switching a lot over. He said in his network, 25 to 33%, a quarter to a third of his patients have been switched from a competitor to Briumvi. So I believe this could be like I said, 10 billion market cap, certainly by this time next year, and by 2027 to 20 billion. That's what I expect. So anyway, that's why I hold the stock. All right, I'm going to move on. I did mention WGS. I didn't plan on putting this one in there. But since I'm here and it reminded me, I think this is another one too. You can see the strong sales growth, and this is what I look for in young companies, the strong sales growth. Now, if they falter sales, then that's a different story. But this is a 3 billion market cap stock, so not a massive stock here. 3 billion is a small company, room for growth. And I think they're going to, at 3 billion, could they get to 10, 12 billion, a four bagger, 15 billion, a five bagger? Sure. In time, yes. Earnings and sales growth, they have it. Anyway, I didn't have that one planned. ADMA was my sixth. Let me see. WGS was my seventh. I'm getting screwed up here. All right. TMDX is another one. Medical product. I think the medical field is primed right now. It's been really depressed for many years, and I think we're going to have a real breakout here in 2025 and 2026 with some of these drug stocks. This is a organ transplant or transportation company, so they preserve organs, they fly them to where they're needed, and people, monitor their flight logs. And I guess, it stands to reason more, business for TMDX. And so it looks pretty good for this quarter. They're going to report on May 6th. So it's coming up, but I expect, sales growth over time, 96 to 121 this quarter. They're probably going to report, I don't know, 130, 140 from 96 to 140. That's pretty solid growth. And just, it's a 3 billion market cap company. You could see the earnings line. Once again, it's kind of jagged. It's not straight up linear, but over time, I'm talking about over time, I'm not just talking about day trading or swing trading. I'm talking about over time, years, a couple of years, 2, 3 years. When you're trying to, swing for the fences and hit, five baggers and 10 baggers, you have to hold them through, 10, 12, 15 earnings calls. You can't just, flake out because it has one quarter where it doesn't, match, expectations. So it's not going to be linear. So it's very important to distinguish that fact, that not every quarter is going to be a blowout. But over time, I think this has got the opportunity to be, I don't know, 10, 12, 15 billion market cap. So yeah, it could be a five bagger absolutely over time. All right, I'm going to get away from the drug stocks and I'm going to go to some of the other names here. I think I've already done about eight or nine. So the last two I'm going to do, two that are not small companies, two that are leaders in the market. This has got a market cap of 125 billion. This is Spotify. I think it's going to model Netflix, kind of that type of subscription model base. They're just gaining market share. More and more people are, subscribing to Spotify. And once again here, you have sales growth 19, 18, 25, then oops, 8, but they're going to report on Tuesday morning. Maybe it'll be 15 this time or 25 again. It's not going to be linear. It's just going to be up and down, spotty, jagged, whatever you want to call it, hit and miss. But over time, they are going to attract more subscribers, have more sales growth, which will lead to this earnings line heading due north. The earnings will be reflected in the stock price. The 125 billion probably going to become 250 billion, eventually maybe 500 billion. Yeah, it could be a three or four bagger, I think. I don't think it's going to be a 10 bagger, but you never know over time, the way things are going. Yeah, this is Spotify. I like Spotify a lot. Going into earnings, I have no idea how the stock's going to respond. Obviously, the market has a lot to say with what goes on. We've seen crappy earnings be rewarded. We've seen good earnings get sold. So you just never know. Earnings reactions are wonky, but over time, I can't stress that enough. Over time, Spotify is going to take market share. They're going to add subscribers, and the stock price will reflect that over time. Anyway, my last one is DoorDash. I talk about this one a lot. I just think for the economy that we're in, this one makes a lot of sense to me. Now I hear that service is not good or whatever, but I know a lot of people use DoorDash. I've never used it, but I get it. It's not that people are lazy, it's just that they're busy, and this is a convenience. We're a society of convenience, right? Whatever is the most convenience, we like that. There's nothing wrong with that. DoorDash is in a sweet spot here. It's already a 79 billion market cap. Is it going to be 800 billion? Probably not. But could it be, 200? Yeah, it could be a two or three bagger. I would expect it to actually. They've showed consistent sales growth. Their CEOs, they're very well managed and very steady with their growth. You can see this 23, 23, 25, 25, and yeah, they're growing. I believe, like I said, this is not going to be a 10 bagger, but I think you can hit a home run or, maybe even a grand slam with this one. It's just time will tell. I like the chart setup here. This thing looks like, still has, an opportunity to be a major, major winner. There's your IPO base. I didn't show a lot of monthly charts with these, which, I should have, but this one definitely looks, like it still has room to run. Back when it first IPO'd, back before the bear market, this came out in 21, January 21. Yeah, it was $256 stock. It could get there. I should show some of these these monthly charts here on these. I didn't. That's Robinhood monthly. You could see this IPO base just getting started. These are just little babies. And this is what I like, these types of young companies that are growing. I mean, anybody can buy an Apple, and then sit it in your retirement fund or Coca-Cola or whatever, Pepsi or yeah, those companies, Nvidia or Tesla. I mean, but these are the young companies that I think could be 10 baggers. So I want to swing for the fences. And so these are the types of stocks that I'm looking for. Rubrik was another one. I didn't show the monthly, but just a baby, right? TGTX, these are just babies. And TGTX has been around a long time. Reddit, I don't think I showed the monthly on Reddit. So anyway, that's my story. I'm sticking to it. If you want to swing for the fences, now these aren't the only companies. There's some others that I didn't mention that I looked at. Credo's one that I like. Once again, it's got strong big blue numbers, and I should show the monthly on these as well. So this is just, a baby came out in 22, bear market action. Another one is INOD, another one of these computer tech stocks. Yeah, just you can see this is just getting rolling here. If I go to the weekly, I didn't include this, but you see the earnings line. So yeah, there's a lot of them, man. I had like 30 and I tried to get it down to 10. Obviously, I didn't do very well because I've already showed you like 15. But anyway, thank you for watching. Good luck this earnings season. If your stock, one of these, you own one of these and it reports a strong quarter and the stock sells off, don't fret because, it's over time. These are companies that are going to grow over time. And, not every quarter is going to be, the blowout quarter that you want. But over time, I think these are going to deliver the goods for us. Anyway, thank you for watching at mcstockcharts.com. We never give up.